Coming up on Market to Market. An agricultural pioneer credited with saving more than 1 billion lives is immortalized in bronze. Melting snowpack may recharge California waterways, but not before prospectors strike gold. And record prices prompt some dairy producers to expand their herds, while others wait for the other hoof to drop. Those stories and market analysis with Alan Brugler next.
This is the Friday, March 28 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. California residents are getting anxious about the epic drought gripping their state. And a private study released this week indicated strong support for billions of dollars in state spending to improve water distribution systems. A survey conducted by the Public Policy Institute of California revealed 50% of likely voters favor a bond issue calling for $11 billion in long-term loans to develop water projects, while about 1 in 3 said they would oppose a water bond on the ballot. Regardless of the outcome, the drought shows no signs of letting up. According to this week's drought monitor from the University of Nebraska, 72% of the Golden State is in extreme to exceptional drought. Federal research indicates California needs somewhere between 6 and 15 inches of rain to make a serious dent in the arid conditions, and NASA has deployed a high-tech aerial observatory to gather data on mountain snowpack, which supplies the vast majority of California's water.
Even though spring has sprung in some parts of America, unprecedented drought in California has yet to shift gears. But warming temperatures in many of the Golden State's mountain watersheds could provide a trickle of relief. And new technology has some rather uplifting news for farmers and ranchers toiling over parched ground.
It's all the way down, right? Nothing there.
About 75 to 80% of the water comes from snowmelt. So understanding the snowpack is really, really important.
NASA's Airborne Snow Observatory recently launched its first flight of the snowmelt season. Flying over the Sierra Nevada range, scientists gather crucial information that could help allocate water resources amidst the prolonged dry spell. Armed with the latest high-tech instruments, the aircraft's cameras and lasers can accurately measure snow depth and other important statistics.
How fast does it melt? Where does it melt? How is it accumulated? Until this project, we really have not had spatially complete information. We've had very patchy information.
The bulk of snowmelt knowledge previously came from ground surveys, which were often inaccurate and incomplete. But getting the lowdown from up high has been a revelation to researchers.
We can add up how much water there is in the mountain snowpack in the entire basin, whereas in past years, it's just been what percentage these few locations, about 5 to 6 locations, are telling us there is relative to the last 30 years.
Back on the ground, there is one silver, or rather gold, lining to California's weather woes.
If you can see a good-sized flake, that's when you get excited.
Low water levels are fueling a modern-day gold rush as prospectors search for the precious metal in the same area that drew hordes of fortune seekers in 1849.
You never know. I do understand it's a dramatic impact on everybody during a drought that's this severe, but at the same token, I'm taking advantage of it.
And with opportunity knocking in riverbeds that haven't been exposed for decades, local suppliers may have hit the mother lode.
The rivers being low makes for business being good. A lot of people's having fun. I've been seeing a lot of new gold come through the door that people has found.
While striking it rich by panning for gold may be an elusive goal, some of those staking a claim in California waterways aren't relinquishing the romantic notion.
It's more of a hobby, but obviously if we hit a nice pocket, then yeah, I would love to make some money.
Political instability in Ukraine, potential weather damage to the U.S. winter crop, and drought in major wheat-producing countries have created a trifecta of higher prices. The rally is attributed primarily to supply concerns. 50 years ago, an agricultural visionary also was concerned about wheat supplies. By developing new higher-yielding hybrids, Dr. Norman Borlaug greatly increased the quality and availability of food in developing nations. And this week, his work was remembered in Washington.
The man credited with saving more than 1 billion lives was immortalized in Washington, D.C. this week on what would have been his 100th birthday. Before an invitation-only crowd at the U.S. Capitol Statuary Hall, a blue drape was pulled away to reveal a bronze likeness of Nobel Peace Prize winner Dr. Norman E. Borlaug.
But I think if Norm were here today, he would want someone else to be acknowledged as well. Because Norm didn't do this by himself. As great as he was, as visionary as he was, he needed partners. And those partners were the farmers of the United States and of other countries. Norm understood that they had to be convinced that a better and brighter day was ahead.
In the early 1960s, the Cresco, Iowa native and University of Minnesota graduate successfully bred a semi-dwarf strain of wheat that combined high yields with disease resistance. The newly developed hybrid helped curb starvation in Mexico, Pakistan, and India. For his groundbreaking work, Borlaug won the 1970 Nobel Peace Prize and became known as the father of the Green Revolution.
Every once in a while, someone comes along who truly changes everything, who fashions the ordinary into the exceptional, who fills a hole that no one believed could be filled, who makes us raise our eyes from the problems of the moment to look around the world. In Iowa, there was such a man. He will stand a great emancipator of our times, one who freed many from fear and from want.
When I think of Dr. Borlaug's achievements, I'm reminded of those famous words in the book of Proverbs, where there is no vision, the people perish. More than a half a century ago, Dr. Borlaug surveyed a world where starvation and malnourishment were rampant, and he had a vision of a green revolution. But because of that vision, and because of Dr. Borlaug's tireless commitment to that vision, the people did not perish.
Benjamin Victor, a 35-year-old sculptor from South Dakota, was one of 65 artists who competed for the privilege of creating the 7-foot-tall statue. It took Victor 2 years to come up with the design and sculpt the clay model prior to the bronze being poured and the finishing touches added. Borlaug, who died in 2009, is one of only 7 people in history to win the Nobel Peace Prize and be awarded both the Presidential Medal of Freedom and the Congressional Gold Medal.
Order breakfast just about anywhere these days, and your entree will likely be accompanied by a complimentary side of sticker shock. The prices of bacon, coffee, and orange juice have all touched multi-year, if not all-time highs in recent weeks due to global supply issues ranging from drought in Brazil to disease on U.S. pig farms. Last month, the government reported that meat, fish, and eggs led the biggest increase in domestic food prices in nearly 2.5 years. And let's not forget dairy products. Milk prices also are in record territory, prompting some producers to expand their herds. Others, however, wonder how long the good times will last. Zach Schultz explains.
The milk prices are exciting right now.
The milk Pat O'Brien's cows are producing has never been more valuable.
I've been farming for 40 years, and I've never seen milk prices this high. It's about time.
O'Brien's Stoner Prairie Dairy is milking 210 cows, and they hope to be at 250 by the fall to take advantage of the high prices.
Well, this is a boom time, definitely.
Farmers are experiencing some very nice margins.
Professor Robert Kropp has been studying dairy prices for the University of Wisconsin since 1966.
Well, we're at record milk prices and substantially higher than we had a year ago.
As is usually the case in farming, the weather has a lot to do with it.
Right now, California has the worst drought in 130 years, and Nevada and some of those areas are very dry. Texas has suffered from that.
Severe droughts in the Southwest the last 2 years and rising beef prices have led to some farmers sending their dairy cows to the meat market.
Farmers sell a dairy cow for hamburger at a pretty good price.
Pat O'Brien says a wet spring in Wisconsin last year made for poor forage, which means lower milk production.
Our milk production isn't quite as good as it has been in the past.
But it's not just the weather in Wisconsin or even the United States that matters.
We're impacted a heck of a lot more whether it rains in New Zealand or doesn't rain in New Zealand.
Kropp says the biggest driver in dairy prices is world demand. And if exporting countries like New Zealand see a decline in production, demand for U.S. dairy rises.
Relatively small changes have big changes in prices.
The United States exported 15.5% of all milk production last year, valued at $6.7 billion.
Record exports last year continued through January, exports way above a year ago. Butter exports up 115%, cheese 46%.
Pat O'Brien remembers when all that mattered was the weather in your own backyard, not on the other side of the world.
We didn't think about the impact of the weather on farmers in California or whether New Zealand had a good crop.
And it takes a confluence of events from around the world.
If anyone knows about the world market for dairy products, it's the cheesemakers.
This came from Austria for the contest?
John Umhafer is the executive director of the Wisconsin Cheesemakers Association. Cheesemakers from around the state are in this warehouse unpacking entries for the World Championship Cheese Contest.
This is the ugly work before the pretty show.
90% of all milk in Wisconsin goes into cheese production, so these men feel the effect of rising prices.
You start to put all that together with really high demand, and the milk prices and cheese prices are soaring.
They're paying, $23 for milk going into cheese, which is, $6 higher than they had to pay a year ago.
Well, when you get a high price like that, it is partially absorbed along the way, and the consumer also sees a higher price.
I think the farmers and the cheesemakers both are going to see some pretty good months ahead.
There we go. Brian Zimmerman is a cheesemaker and says his profits are tied to the price of a 40-pound block of cheese.
So as the 40-pound block price increases, our profits increase.
Welcome to the Wisconsin Cheesemakers Association World Contest.
While rising prices likely won't impact the sale of high-end cheese like that found at the World Championship, Umhafer says cheesemakers are worried high costs could eventually be too much for consumers.
There's always a range that's good, and if you hit the top of that range, you start to get the consumer saying, I can't afford that. The cheesemaker would love to see a price settle in a little lower so the consumer's happy, the farmer's happy, he's happy. We don't need record prices.
Bob Kropp isn't seeing it.
We've seen in the past when cheese got over $2 a pound, we saw some resistance on the demand side. We're not seeing that.
Pat O'Brien is also concerned the high prices could drop off.
I'm a little concerned that we may overproduce and there'll become a huge supply and we're going to lose this.
In the past, a jump in prices led farmers to increase their herd size. But Kropp thinks this graph of milk prices in recent years will make farmers more cautious.
They know they're not going to stay at record levels forever. They know feed prices go back up again, and so they're maybe more cautious in expansion, recognizing there is more uncertainty.
We have no intentions of expanding. We're just going to kind of get caught up.
Pat O'Brien says he'll use extra income on repairs that were put off during the hard times, like new barn doors.
The milk prices in 2009 were devastating. And I think there's a lot of farmers, probably a little bit including ourselves, are still recovering from that time.
Meanwhile, farmers and cheesemakers want you to know their profit is your gain as well.
You make hay while the sun shines. And when the cheesemakers are doing good and the farmers are doing good, the local economy is doing great.
We go downtown, we spend our money at the implement dealer, we spend our money at the car dealership.
Kropp says the good times will continue, at least through the end of the year.
Prices will be lower the second half of the year, but we're not looking for real sharp declines.
For Market to Market, I'm Zach Schultz.
Next, the Market to Market report.
Grain futures contracts posted modest gains this week on supply concerns and strong foreign demand. For the week, May wheat gained 2 cents, while the nearby corn contract moved 13 cents higher. Soybeans extended last week's rally as the May contract rose 28 cents. Nearby meal followed suit with an upward move of $12.50 per ton. In the softs, cotton continued its march higher as the May contract rose 43 cents per hundredweight. In the dairy market, April Class 3 milk gained 32 cents, while the deferred contract lost 21 cents per hundred. Livestock prices were mixed this week as the June cattle contract gained $2.23. Nearby feeders bounced back from last week's decline with a gain of $3, but the June lean hog contract retreated a bit this week with a decline of 75 cents. In the financials, the euro lost 5 basis points against the dollar. Crude oil gained $2 per barrel. COMEX gold lost $41 per ounce, and the Goldman Sachs Commodity Index advanced by 10 points to settle at 650.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Alan Brugler. Alan, welcome back.
Always good to be here.
We're glad to have you. It's been an interesting week. There's been a number of articles this week in different news sources talking about the advantages of trading commodities versus equities in 2014. What have you seen or heard? Where's this money going in the broader market sense?
Well, we're definitely seeing some inflows into commodities. It started back around the 1st of February after, if you recall, the stock market had a little bit of a sell-off in mid-January. So I think they're back to playing the idea that commodities are inversely correlated to the stock market. And the stock market, of course, had a huge year last year, so you would expect a little backing and filling, and that makes commodities attractive as an undervalued asset. We're seeing those money flows in a number of markets. We had MACD buy signals in corn and soybeans and wheat, cattle and hogs and cotton. That's a pretty good inflow. Oats had a wild time there for a while too. So plenty of evidence that there's some money moving into commodities.
We're getting some compelling stories out of the ag commodities in particular recently. And as we look over at wheat, I mean, there's an example as we look at the Ukrainian situation. What else is driving the wheat market here this last week and into the next one?
Well, it's primarily the trigger event was the Ukraine. The other event is the condition of the U.S. crop. The crop condition ratings have been going down in the states that are reporting. USDA won't start until next week, but as far as a national number. But the state numbers have been going down a little bit. There's dryness in some areas. There's some winter kill because of the very cold temps with no snow cover. And so you've got some concern about just what the state of the U.S. crop is. We'll get a wheat acreage number on Monday from USDA. Trade's looking for around 56 million for total acres. But so you've got U.S. supply concerns. U.S. stocks are at a 4-year low. And then you've got this Ukrainian situation and questions about their production this year.
So we've got some nice carry in the wheat market now. Do we expect to see favorable prices going forward?
Well, I think we're putting in a weather premium so that the U.S. can fill any world need for missing wheat from the Ukraine or Russia because of some kind of political embargo or something. I don't know that it's necessarily going to hold into harvest because if the crop's looking good, we're a residual supplier. There's other places in the world like Canada that have a lot of wheat to ship.
All right. Now, as you mentioned, we are expecting the acreage number on Monday. Anything producers should do in the Sunday overnight into Monday to get prepared for the prospective plantings and grain stocks?
Well, I think you have to be pretty defensive on wheat just because we've had a pretty good run up here. There's an old saying that wheat takes no prisoners. It went straight down and it's been going straight up. But we are overbought. We're up against some technical resistance. There's some more 30 or 40 cents higher. We've been suggesting that you ought to have at least some put options in place and maybe make a few cash sales if you haven't got much sold for this year just to reward the rally.
All right. Now let's take a look at the corn market. Again, decent little rally this week. What's driving us there? Is it export demand really moving that market?
That's the number one factor. We had 1.4 million tons sold this week. The Egyptians bought more than 400,000, which was a bit of a surprise to people and suggested maybe they weren't buying from Ukraine. The Ukrainian Ag Ministry continues to tell us how great their export program is right now, but there's some evidence to the contrary. So, the fact that we've got more than 90% of the USDA's forecast for the year already on the books is very positive. Now, I would caution that almost 5 million tons of that is to unknown destinations. That's a little bit of a squishy number, and seems to be easier to get cancellations or deferrals out of that category. But again, tremendous exports, and that's tightening up the perceived ending stocks for corn and has been pretty supportive for the price.
Now, as we take a look at the new crop corn, again, we're seeing some nice stability out there. We've been pushing close to 5 basis. In a lot of areas is different. But what's your advice, again, as we head into Monday? How do we react on that new crop corn?
Well, you have to look at your cost of production first. What what do I need to have? If you're in the black and you've got very little coverage forward, but you've got some exposure due to inputs, I think, again, a little bit of forward contracting, we're basically 20 to 25% cash priced, is probably wise. And then some kind of put protection. What's called the short-dated new crop options have been pretty popular. They expire in May, but they're a lot cheaper to buy than a December option, and give you that same new crop price protection.
You bet. You bet. Now, as we look at the report, trade's anticipating roughly 92 million acres on the report on Monday. What sort of numbers would really move the market big one way or another?
Well, I think if you're up at 94, that's going to be bearish. That's more than most people are expecting. There's probably a couple estimates out there that high. Something in 91, 91 and a half would probably be bull friendly. Normally, though, the grain stocks number is the big mover in this report.
All right. And what are we looking to expect there?
Trade's looking for 7.1 billion. We think 7.15 to 7.2 is more likely. Anything in the 7.3 to 7.4 is going to be bearish, I think.
Okay.
And below 7.1, yeah, we can continue the rally.
All right. Now let's take a look at soybeans. Talk about continuing a rally, up another 28 cents this week. Again, what's driving this market? Still foreign demand?
It's foreign demand. It's basically that we've already sold 107% of the expected exports for the year, and over 90% of them have already been shipped. So they're out of the country, not subject to cancellation, and we just don't have any room to make any more old crop sales, on paper at least. And we're still making some. We sold another 11,000 tons this week. And basically what it looks like is we're going to ship ours out and then import Brazilian beans this summer in order to fill the void. The crushers are going to still need supplies that aren't going to exist here because we shipped them out of the country.
And we're already seeing that happen, correct? China's been rolling some contracts north from Brazil to America?
Yeah, the Chinese got in a bind here. Their hog industry has been losing money. They're trying to cut back the hog supplies a little bit. That's hurt meal demand. Therefore, they've got more beans than they need right now. So they've been trying to cancel, or delay, or otherwise dispose of some cargoes. And yeah, we're told that several cargoes that had been originally going to China are going to the U.S. Gulf or the U.S. East Coast instead.
All right. Now, on the new crop side, we are expecting bigger acres in the report on Monday. What is the trade anticipation there on Monday?
Trade's looking for 81.2 to 81.5 million, depending which survey. There have been surveys that were over 83 million acres, which would be a tremendous swing from last year. We think probably 81 is about the max. We'll see.
Okay.
That's still very dependent on what your final yield is, as to whether that's enough beans to flood the market and have 300 million carry out, or if with the current demand, we basically just have to have a little bit of a pullback.
Okay. All right. So that's what to keep an eye out there come Monday on the beans report. And quarterly stocks numbers, anything, are we anticipating any big shocks there, or just not a lot of beans?
Well, expecting to be below 1 billion bushels for March 1 stocks, and that's a fairly low number for that time of the year.
All right. Well, let's take a look at the livestock market. Saw another rally in the cattle market this week. Fat cattle side continues to climb. What are your thoughts there? Are we getting near a top, do you think?
Well, the key is the cash market. We should be getting into some larger slaughter numbers here. There's a seasonal uptick based on when the cattle were placed last fall. And that should start to pull the cash back. Now, this week we saw pretty strong cash bids in 152 trade, 246 in the north. And basically, if we hold that another week or two, April futures have to rally because we're going to go into deliveries and there's just too much of a spread there. Right now, April's kind of hanging in there waiting for cash to come down, thinking it's going to, but it's not delivering the goods. So it's hard to be short the futures right here, given the discount of the cash. I'd point out it really does help hedgers, though, because with that kind of basis, you're not fully reflecting the amount that the market has gone against your short position.
Yeah, because it's a $5 to $7 basis to the producer in a lot of places.
They're getting much more than they originally were trying to get when they locked in the hedge.
You bet. Now let's take a look at the feeder cattle market. We saw a $3 move this week. Are we going to see continued strength throughout? Are we seeing feeder numbers pull back as guys retain heifers to grow herds?
Well, we're definitely seeing some heifer retention. We'd see more if the grass was better. I mean, you look at some of the pasture conditions in the south, which is the only place we've got anything growing yet. They're not that good. And so we're seeing some limited retention. The biggest question, if you're a cow-calf guy, is can I keep the feeder prices high enough, long enough to have something to sell? And so it's a bit of a gamble. Supply and demand wise, there's definitely, with cattle prices where they are, there's good demand for the feeders. And if corn were to pull back next week, that would actually jack up the price of feeders further, I think.
Does 180 look like it could be? Where is the next level of technical resistance, I should
Technical
ask?
resistance is a little over 180. That's a Fibonacci expansion count on the long term, the monthly chart.
Okay. All right. So things to keep an eye on should corn pull back. If we get a bearish number on Monday, we might see a little bit of resistance there that the market would have to push through. Yeah. All right, well, let's take a look at the hog market. We had the hogs and pigs report out today. Can you break down those numbers for us? What did we see?
Well, the numbers were a little larger than the trade was expecting. We had on the breeding side 100.2% of a year ago for sows, so not real evidence of anybody having to close too many houses to handle the PED virus. On the other hand, we were expecting to have by now 2 or 3% expansion. That isn't happening yet because of the issues. But the main story is in the lighter weight categories, the under 50-pound pigs, the 50 to 120-pound pigs. We were only down 3 to 4% versus year ago. Be under a year ago technically.
Sure.
The trade has been trading. The futures have been trading a 7 to 9% shortfall in hogs. So this basically says there was less loss from PED than what the trade had been anticipating. And I think that's a little bearish for the market given the size of the rally we've had.
You bet come Monday we might see a bit of a sell-off in the hog market.
Probably limit down.
All right. Well, thanks for being with us, Alan. Appreciate your time tonight.
You're welcome.
That wraps up this edition of Market to Market. But Alan and I will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll assemble a blue ribbon panel to examine the impact of USDA's prospective plantings and quarterly stocks reports on a special edition of Market to Market. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.